Good morning, everyone. Thanks for joining us today for the quarter one benchmark unveiling, I guess. But hard to believe quarter one's already over. But thanks for joining us. Feel free to drop in the chat where you're calling in from. But happy to. We'll wait a couple of minutes as everybody continues to join, and we have a big list today. So excited for everybody to be part of it. After this, you'll get a certificate, a continuing education certificate, as well as a recording. So we'll keep you posted on that. But but yeah, we're gonna wait a couple more minutes as people trickle in, uh, and then we'll get started. But my name is Brett Neller, CEO of LineLeader. Excited to be here today. We got Teddy, VP of Product. He's the talent, so he's going to walk through all of the statistics. We have a lot of information here to share. So thousands of childcare centers across the United States use our platform. We're able to aggregate a lot of the benchmarking stats around enrollment operations, and it's really interesting. We're going to reflect a little bit on the past, I don't know, 4 years or so, and kind of identify some trends that we see in the data and what's happening today. But feel free to drop your questions in the chat as we go through it. We'll try to get to them as much as possible. So, all right, I think we've settled on attendees. Without further ado, I'm gonna go off camera and hand it over to Teddy.
Thanks, Brett. Appreciate it. Thank you, everyone, for spending a little bit of time with us today here as we go over our Q1 benchmark stats. I know these are statistics that people are enjoying, and we are getting requests for sharing, and we'll continue to share these and other statistics as we compile them within the industry. So we've done this, maybe 4 or 5 quarters now. If you are a reoccurring guest, you can slightly tune out maybe for the next couple slides as I kind of just tee up the presentation and where the data comes from, but always good to maybe keep an eye on this as well. If you are new here, definitely want to take a little bit of time up front just to explain how we generate our data, where it comes from, and what you're going to be looking at today. So you hear us refer to segments often. That's just how we break up the childcare landscape really globally. It helps us because operators in different segments, they just operate a little differently, right? So we'll take a view at that, but this data includes all of our customer segments, regardless of size, scale, right? Brett mentioned we have thousands of centers that are incorporated in this data, which allows us to produce these anonymized benchmarks, which provide really good analysis for y'all to kind of review and make some decisions based off of. History, we have data going all the way back to 2015, which is incredible to look at times, but it also can be a little distracting. We really do like to look from 2022 going forward now to try to give a more relevant view of, kind of call it the post-COVID world. That's where we're really honing in onto the data right now, and that's a lot of the data you're going to see in the presentation today. And then this is US-based geography. We're very fortunate to work globally in a few different countries around the world. But while there are many similarities in childcare in other countries, there are many differences. So to make sure this data is accurate, we do locate it to our US customer base. So one thing I also want to mention here, when we present this data, we focus a lot on the word registered. And that for us is our customer's way to typically indicate we have signed up a child with an expected start date. Does not necessarily guarantee that child it has started yet. That's typically indicated by an enrolled trigger. We like to use registered because it's a much better gauge of signups within a period, and it's also a lot easier for us to kind of stack that anonymously across thousands of centers. We don't yet include things like capacity constraints, age mixes, physical started counts, as we mentioned. So if you're looking through the data, one of the questions we always get is, hey, do you have a way to pull out centers that are full, that maybe don't have an opportunity to enroll? That gets a little complicated. We have to start making assumptions in the data set to do that we don't necessarily love to do. So when we aggregate it all and benchmark it, we can assume, hey, whatever kind of the national average might be on centers that are full, which is not a ton, there are out there. We can kind of assume those averages are gonna play into the data set here. So the two big buckets of data we look at is what we call cohort versus non-cohort. We've used these terms, I think, quite a bit over the last year, and we're going to continue to use them. Most of the data you will see today is our cohort data. For us, that implies they came in over a very specific time range. For us looking at this, that would be Q1, right? That means we're only going to look at data that was created across our platform January 1st to March 31st. We like doing that because it gives us a very effective way to measure that group of leads and how they're performing. There's also, though, the element of non-cohort data, which is just like what happened regardless of when the lead was created. We think this is a really, really good view as well. If you're more interested in like just how many children registered over the 90-day period of Q1, non-cohort data is going to tell us that number, right? But the cohort data is going to tell us of the leads we created in that period, what happened to them specifically. Both are really, really impactful numbers. All right. So before we get in, we like to break things up a little bit in eras as we're segmenting our data. It helps us spot for trends. It helps us talk about the data. It helps us kind of connect across the industry. It helps us spot patterns, right? Shock and system freeze is what we're kind of calling 2020 and 2021, right? It's kind of the chaos period. Are we going to survive? Are we going to make it through? What's going to happen to the industry? What's going to happen to centers? Are children still looking for care? What's going to happen to the world, right? Ultimately, I think childcare came out incredibly strong from that period. But we all kind of, I think, like to almost forget about those couple of years, and we don't have a lot of data from 2020, 2021 in the deck today because it was almost so chaotic and such a unique global event that it's almost hard to trend data off of, right? So we know, hey, this was kind of this crazy period of time. Are we gonna survive to the next day? We did, incredible. Okay, what happened from there? 2022 and 23 are interesting. I think probably like two of the healthiest years we've had in my time in the industry. I have been in the industry since 2020, actually. Many of you on this call much longer than I have and much more experience. So you could probably build eras well back throughout the 21st century. But 2022, 23 is interesting, right? Funding actually worked quite well post COVID, and lead counts were strong. Of course, there were challenges. There are always challenges in our industry here. But this was probably the best period for care in terms of demand that we have seen to date. And then you kind of got into this post relief. We're calling it kind of the reality reset. 24 and 25, things started to get a little bit uncomfortable again. Really not sure what's going on. A lot of funding has dropped from that kind of 22, 23 period. A little bit unsure about what is real and what isn't real in terms of kind of data and stats and just health of the industry. And this has been an interesting period, right? I think it's been a lot of operators have kind of said, hey, things are a little bit harder than actually we would have expected them to be. And then 26, we're spotting a potential emerging trend here. We will reserve the right to walk this back if it doesn't quite pan out, as things are changing quite rapidly right now. But on our side, we're almost quoting, kind of titling this the era of competition. Part of this is based on the data we see. A lot of this is also based on the conversations we're having across the industry. And right now in the United States, it is incredibly competitive market. And when we say competition here, we don't necessarily refer to, another private childcare provider down the street from you, although that could be the case. We're referring to other programs and other ways that are taking, children out of private childcare, right? Things like public pre-K, things like stay at home. Yeah, very unique circumstances. So we're kind of spotting a trend here. We're going to keep our eye on it for sure. But these are kind of some eras we've seen and changes in kind of the macro level view, and how we'll section our data a little bit to help tell the story. So, how are operators feeling? We're going to move kind of into sentiment here just before we jump in. Would love you all to kind of comment if you maybe agree with this or disagree as well. A lot of this is subjective in terms of, again, the sentiment we're hearing out in the space, and a lot is objective based on what we can see in kind of data. We like to look against 2023. Again, we're kind of calling this, hey, how do we feel from maybe what we would consider kind of that healthy high of the demand surge period post-COVID? Enrollment, I think we're pretty cautious, right? I think we're pretty cautious. I don't talk to a lot of folks these days who are saying, "Hey, enrollment is higher and better than it's ever been before," right? Care is getting more expensive. Families are considering options. Mature sites are doing fairly well. New sites are hard. It's hard opening new sites right now, I think, right? So enrollment is cautious. It's not negative, it's not concerned, it's not low, but it's not high. It's not accelerating, right? I think we're kind of cautious right now in terms of our mood and feeling here. Teacher retention and director retention, I won't talk a ton about these because it's not my core area of expertise. And again, you all are the experts here more than we are. But what we're feeling is teacher retention is actually looks to be getting better. I think in 24, 25, this was kind of the top crisis of the time, maybe of course around some policy environment as well that's related. But this feels to be getting a little bit better. I don't think anybody in our space is going to be saying, "Hey, like we're super comfortable with teachers and wages and retention on staff." Like I think that's always going to be a big challenge for us to discuss, but this does feel to be kind of trending in the right direction. Director retention is harder. There's just so much we're putting on these directors. This is something that we do try to focus a lot on at LineLeader, and I think a lot of software players in the space are joined in this mission to kind of reduce the burden on directors. But ultimately, there's always concern there, right? There's just a lot that is put on that role. They are also the most important person, arguably, you need when opening up a new center. So we know new centers are hard right now. That position is, we know, critical to it. So that's one to watch. Financial outlook, again, is this ever not going to be anxious? We're probably always anxious about our financial outlook. That's the kind of the right mood to have. But ultimately, there are some, headwinds here, right? Insurance has been a challenge. Like we said, tuition, you can't just kind of raise forever. Inflation is kind of aggressive over the last couple of years. It's a tricky margin business as is. So financial outlook, we're kind of saying, hey, we're always a little anxious. I don't think this is getting materially worse, but it is certainly something to look at. And then policy confidence. The policy environment is very tricky right now. Very tricky right now. There was, great ARPA funding that helped us out to get to that kind of 2022, 23 acceleration and maybe health we were seeing. ARPA funding is now a thing of the past. We rely on CCDF a lot. That has gotten, what was the number? Maybe 85 million in 2026 increase, but that doesn't necessarily even outpace inflation. There's a lot of talk in DC, we know right now, in this government around funding, around concern with fraud. It's just a tough environment politically. I think childcare will continue to be stable. We are always at the forefront of the conversation. And again, CCDF does I think that is locked in for 26. There's not necessarily a concern about that being impacted, but you're going to see a lot of this shift to states, we think, and a lot going on at the state level. So yeah, there's always concerns on the policy front. All right. Well, let's talk about data. That's what we are the experts in on enrollment, not necessarily policy, but we do like to frame it again. How do we think about the funnel? We're going to see a lot about the funnel today. We're going to talk a lot about the funnel. That's the whole point of this presentation and what we benchmark. This is where we do have our expertise. I like to look at a funnel in three distinct slices. You can of course slice it more ways. We like to talk about it in three slices because it's a very efficient way to look at it and kind of where you can choose to kind of pay more attention to and where we can kind of let it run, right? Top of funnel is key. That's going to be how many leads are we generating and how many tours are we booking. This is definitely a marketing owned function, right? There's no hiding from this from our marketing folks. Like we're responsible for generating leads. We're responsible for making sure these leads are legitimate to book tours. Mid funnel, how do we actually make sure that we're scheduling tours, they're showing up and they're completing? If you operate an enrollment team, this is a big enrollment team function, right? Are we setting up the right path to actually schedule a book and make sure those tours show up? If you don't have an enrollment team, this does probably fall back to the director a bit, right? Whoever is actually doing the enrollment operations there. Bottom of funnel, this is a big center director one, right? Like who is running the tour? At the end of the day, this is one thing we can't handle digitally. Most unique part about childcare, one of the things that I think is fascinating about, frankly, the sales process of this industry is the tour. You just don't enroll someone without it. So it's a fascinating part of the funnel that is owned by the director, but of course, in all of these buckets, other people play a role, right? But just kind of looking who might own it. And then the full funnel. This is going to be all stakeholders. Nobody can run from the full funnel. Everybody plays a part. Our marketing team to generate demand, our enrollment services who might be actually scheduling and managing the tour process and following up on missed tours to get them rebooked, who's actually running the tour. We might actually have like post-tour follow-ups as well, right? Who's actually working on kind of contracting. A lot of this is on directors. A lot of this shifts out of the director seat for larger organizations into enrollment teams. Marketing, you might have your own department for it. You might not. You might be kind of the director, the marketer, the enroller all in one. You're an amazing person if you do that. I know many of them are out there. So let's look a little bit at the data. You've been waiting patiently. Now let's dive into the data. This is the slide we have shown as kind of our core overall benchmark now for the last four or so years. So I'll kind of walk through and explain this again. A lot of the data we're going to look at over the next few slides does look at our enterprise operators. And we do have data for non-enterprise as well. We like looking across the enterprise operator space because, again, it's very easy for us to kind of stack all of these customers together and build these trends. They do work pretty consistently across the United States. So it's a really good way, again, for us to baseline, hey, what's kind of the benchmark health? So we look at average leads registered per location, a mouthful, a mouthful. This is just going to tell us again over the quarter, on average, how many children are registering, are actually signing up and saying, hey, I've got a secured spot and I'm starting on this date. We're sitting right at 16 for Q1 2026. We generated this data refreshed as of yesterday, so we always wait 2 weeks after the end of the quarter to generate this data. And that was the number that came in for Q1. So the positive here is it is up from last year, but almost largely flat, right? 15, 16. You're now kind of seeing 15 over the last couple of quarters. 16 is kind of marginally up, but largely flat, right? You're looking at 19s from 2022 and 2023. We talked about that being kind of our demand surge period. 2024 is this like historic low in our data set. This is when things like really pulled back. And I think we're very cautious to say that things are really like improving. I don't think that's language we're going to quite use here yet from a macro standpoint, but they are heading in the right direction. So we're going to watch that trend very closely. We know it's very cyclical industry from an enrollment perspective, so we'll expect a modest Q2, and then we are excited to look at Q3 of this year. That's always a huge quarter for us to evaluate because you're always going to see the highest enrollment numbers in that quarter. So it's a big one for us to watch. Here is the massive data table. I am not going to spend too much time on this because your eyes will bleed, but I do want to walk through it a little bit just to explain how we track the data. If y'all, again, have been here a few quarters now, you're familiar with this. We've started with some new views this quarter because again, you can look at this and say, oh my God, where do I start? We kind of nerd out on this on our side. So we do like to show it for those of you that are a little data obsessed. But over the top, again, you're going to see your quarters. We like measuring in quarters because they just work really, really well to benchmark and analyze off of. And then we're going to look at our slices of the funnel here, right? Top of funnel. How many leads are we generating per location and how many tours are we booking? Middle of funnel, right? Are the tours actually showing up and completing? Bottom of funnel. Do completed tours register? And how many leads register per location? And then that full funnel metric, NL to registered, new lead to registered. What is our full funnel conversion? You will see us in every slice of this show the median and the average. We will typically do charts based on median. Again, we think this is a little bit better of a North Star compass for you. Going to show you the middle of the road. Again, that's the middle, right? So there's going to be half of operators that are below it and half are above it, but that's the best way to benchmark it. Averages are great as well. If you look at average and median, it can sometimes tell us, hey, is there like a really aggressive high pulling up the number or maybe a really aggressive low pulling it down? So we can play off both of them. But just to give us a direction and a sense, we like looking at median. We like looking at our various slices of the funnel. We like looking at these color deltas that can tell us what was our change versus that same quarter last year. So if we were just to kind of almost squint our eyes and look at this table, where's our green versus red? Well, we can tell we're pretty red. We're pretty red in lead generation. That's going to be something we'll touch on a little bit today. We're pretty green in tours. That's good, right? We're a little bit mixed in terms of mixed or flat in terms of our tour conversion mid funnel. We're historically red in bottom of funnel. That is converting green. You can kind of look up and down the quarter or actually across the horizon too. We're a little bit red, a little bit green, a little mixed. There's maybe not a clear direction here on full funnel. And same thing with average lead registered per location. So this is a kind of a quick way we can glance at this and say, where's the macro trend? All right, let's dive into some of these individually because again, this table, we love it. We'll spend all day in it, but little hard to read, right? So how do we fare against individual other segments? We said that in the first quarter, we saw about 100 leads generated per location in our enterprise segment. If you're going to be more of a mid-market operator, that again is a very big slice for us, but 3 to 25 centers, and probably operating very differently if you're 5 centers than 15 still. But that mid-market segment, you're going to see about 40 leads generated, and it's going to be actually very similar on the SMB front as well, which is our 1 to 2 center operators. So interesting to note. I think when you get to the enterprise space, you probably are going to have budgets that are specifically dedicated to SEO and lead generation. That's generally probably working quite well, paying for leads, which are very expensive these days, and the cost is continuing to rise. But that's kind of an interesting observation there. You're going to see quite a bit more from the larger operators, likely because there's going to be budgets focused on that. New lead to tour scheduled. So this is something you'll actually see this SMB and mid-market operators a little higher in. You'll notice they're a little higher in the 60s, but if you kind of want to benchmark that again, you should be maybe around 60% of all leads scheduling a tour. That's that top of funnel metric. That's that crucial marketing metric. How many of our leads are actually tour scheduling? Then mid-funnel completing. You're going to see a little bit similarity here, but again, some improvements in the mid-market as well. You maybe have a better opportunity in these kind of lower market segments to stay really focused on quality and on care and on tours. That gets a little bit harder as you scale. So are we actually closing out these tours, following up on tours? Tour completed or registered, probably the biggest significance in the funnel right here. This is one we'll talk a little bit about and pay attention to. The big difference we see in the data right now is this is kind of the edge. This is kind of the edge is what are we actually doing to convert families that show up at our centers? and 41% is that bottom of funnel metric. So you see quite a bit of variability in full funnel flow here. And that is kind of the difference in how many leads are registering. Why do we see the enterprise ultimately has more? Well, they're generating 2 to 3 times more. What is leveraging the mid-market? It's that they do quite well full funnel, driven by kind of a little bit better performance in each area. And SMB operators do have some advantages in the way they work as well, not registering as many families, but of course, we don't have as many resources here and we're not focused on generating as many leads. So this is pretty consistent we see when we do measure each quarter, but we do like to kind of take a slice here and help understand, I think this is important for you based on the size of your business to evaluate in your segment. If you're a 1 or 2 center operator, you don't have the resources of somebody that's 100 centers. So you're going to approach things very, very differently, and we're going to try to continue to produce stats that let you see kind of your cohort here that fits.
Hey, Teddy, real quick, we have a question from an attendee. They've asked, is a lead a child or a family? And are these leads deduped before reporting?
That's a great question. A lead for us is a child. We always look at things based on the child, and that's a great thing for me to include earlier on when I'm going over the data set. We will always look at a lead as a child because a child is the opportunity. If you have a family with 3 children, those are going to be 3 individually tracked opportunities that will hold 3 different statuses that might move through your pipeline in 3 incredibly different ways. If you have a family that doesn't have a child associated with it, we still consider that a lead, right? That will always be a singular lead though. So if you're a family that's childless or with 1 child, you'll always count as 1 for us. If you're a family with 4 children, you will count as 4 because ultimately the child is the lead. If we don't have child data, we will assume there is just 1. I might have forgotten this. Was there a second question? I actually might have forgotten there.
No,
Um,
it is the lead is a family, and then if the leads are deduped before
Oh,
reporting.
leads are deduped.
Yeah.
We don't necessarily do like deduping, but our system does a lot of that on its own. If a lead is in what we consider a rejected status in our system, which usually customers will do if they're going to dedupe leads, we do not pull those in. So kind of what has been identified as a duplicate lead is not going to be something we're including in our data set. So, digging into average leads location. So, top of funnel, starting at the very top. This is kind of interesting. We're trying to map this a little bit against some of our eras. We do again like looking quarter over quarter. So it's not all. It's interesting to kind of look at this trended every single quarter over a 4-year period. But ultimately, you can see here you're kind of leaning down. 127 in Q3 Q1 of 23 down to 107 in 2025. So this is definitely legitimate. Like there's almost no different way to interpret the data other than like we're generating fewer leads. There's no doubt. Like year over year, there was a huge peak in 22, 23. And it's just been down since. Again, our goal here is to look at the macro, to find the benchmark, to tell the story. And the story is lead generation is going down. Again, it's not like critical, right? We're still seeing a good amount of leads generated, but it is dropping. So this is one thing we need to focus on. Like you're probably going to get fewer leads than you were before. Why is this, right? Again, the era of competition. There's just a million different things, not a million. There's a handful of different things that are competing for care right now. But also think about the age we live in of information. It is incredibly easy to gain information right now as a parent before where maybe I was reaching out to 5, 10 different centers. Maybe that's high, right? Maybe there's 5 centers I'm reaching out to. Now the amount of information you can surface on your own, you probably can get it down to 2 pretty quickly and target those directly. So a lot of different reasons for this. We'll kind of make some educated guesses and look at the data. But it's also more expensive to generate leads than it's ever been before. There's a lot of changes to the way you can collect user data out in your SEO strategies and your marketing strategies. But Lead generation is down, right? It just this is a pretty clear data point for us, and it's something to keep an eye on. And it just means that every single lead that enters your funnel is more important than it was before, right? All right, let's continue to stay at top of funnel and look at that new lead to tour scheduled. Pretty interesting. Was a lot lower a few years ago, kind of rose up in 23, and it's been pretty flat. I'll be honest, a big reason for this is how aggressively we've seen the market move to things like self-scheduled tours. That is going to influence this data point. If you let leads self-tour, they're going to accelerate through the pipeline here quite a bit quicker, right? So that is something we'll always asterisk here, and you can see it very clearly in the data. I don't think there's like a macro shift here so much as it's just we have adopted a practice as an industry. I remember back in 2020 when I was working with a lot of our customers, very hesitant to do things like self-scheduled touring because it took that phone call, that warmth out of the beginning of the process. It's so table stakes now. It's not going to be all of your leads, of course, but this is a big reason we'll see kind of an increase in how many leads are going to end up scheduling a tour. But it's pretty flat in the 60%. We're not seeing a ton of movement here. We can feel relatively comfortable in kind of where this is benchmarked and where you can kind of see yourself gaining an edge, or maybe a little bit below the median. This, of course, is something where marketing teams want to spend a lot of time with because you want to look at your different channel distribution as well. If I'm dropping, like even if I'm 60% across all leads, like I want to know which of my channels are in the 80s, which of my channels are in the 30s, If I have a really poor channel in terms of new lead to tour, like yeah, Facebook is going nuts. We're getting crazy leads from it, but they're not actually even booking tours or they're not even showing up for tours. You got to know that data because that's going to be an inefficient cost metric for you. So we just talked about leads are really hard to generate. Give your marketing teams some grace on that. But at the same time, we need to pressure test that the leads we're getting in the funnel are actually highly converting leads and legit channels. Let's go to that mid funnel, right? Tour completed. This is really interesting. This is one of those, again, you've seen macro level drop a little bit, but it plays off the last slide. I always say this, if we're going to make it really easy to generate and schedule tours, we're probably going to make it a little bit easier for folks to not show up to them. This is an area where we really need to rely on operators to set up their enrollment process properly to engage with families once they've booked a tour. And frankly, what your process is for families that don't show up for a tour. Super easy for them to miss it and just be like, well, okay, moving on. But families are busy. You know this better than anyone. It's very easy to book tours. That means we're making it a little bit easier to miss them. We are catering to the current family experience and parents today, which is ease of use and adoption, but that's okay. We should actually double down on that and find ways we can also enable ease of use and friction to make sure tours we're booking are completing. But again, this is relatively flat. You can see it's always going to be in the 70s, was a little bit higher a few years ago, a couple dips here and there that we can look at and analyze. But again, I think a benchmark here tends to hold pretty well at around 75% of tours completing. We're okay with, if you had 100% of tours completing, I'd actually be worried. I'd be like, wow, okay, we're way too conservative in our lead generation. We need to ratchet that up. If I'm 50%, I'm worried the other way. Oh my God, we're really struggling with, either something in our process or the sources we're generating. So interesting data point here, not a ton of change, but continue to get data that's kind of supports where the benchmark should be. Tour completed or registered. Really fascinating bottom of funnel data point. If you asked me where can I make a difference today, you probably have like two spots, right? One, you can just generate leads more effectively than your peers because you have a really good kind of marketing strategy there. Two is going to be kind of the old trusty, close rate here. We get families in the building, and when we do, we get them to sign up with us, right? We have kind of that differentiated experience there. This is a differentiator. This is a metric that has climbed. So when we see operators who are continuing to do well, they're doing well in this metric. Now, again, is it easier for healthy full centers that have a really strong wait list, incredible strong branding in the community? They market leads not by spending money online, but just word of mouth. Probably, right? Probably. This again is one that I think is a lot easier for established, mature centers to excel in. But it is a difference maker metric. It is in our data. If you're gonna sneak ahead, you want to be focused bottom of funnel. So good to look at this, good to measure it, good to see how your centers are doing against each other. There's a lot of different reasons in the data that might be determining, your bottom of funnel kind of close rate. It could be personnel, it could be demographics, it could be cost, it could be a lot of things. But this is a number you definitely want to know, and you want to lean on, because if we're getting fewer leads in the funnel, nothing is more important than, the family that shows up to your center. That's a high intent lead. If we're already talking about the fact that they've probably already whittled down their choices through a lot of online research and community conversations, there's a pretty good chance they're interested if they're going to be walking in the door. So really fascinating metric here. And yeah, you see it dropping a little bit if you look at the line chart, but that's okay. Typically, you're going to see those drops from Q3, where it's just such a high demand quarter. Again, if we look at Q1 to Q1 2025, that's where we're seeing quite a bit of increase. Same with the quarter one data 2 years ago. And then this is back to the slide we saw at the very top. So just another view at it. I won't spend too much time here because we already talked about it at the top, but just another split view here, quarter over quarter, of what we would expect registrations per location. Seeing 15 the past few years, and then 16 this quarter. So hopefully we'll see this continue to accelerate. This is, I think, a data point we do want to lean on and see health. But we'll watch. We know Q2 will be a little similar probably to Q1. Q3 we'll see quite a big jump and then a drop in Q4, but we want to make sure, are these increasing over past years? If the lead counts continue to be lower, if competition continues to increase, it's going to be harder for this number to increase. But for the centers that are, up on the upper end of those benchmarks, it's going to be ones that are taking advantage of the families that get in the door. So how do we kind of wrap this up? If you're like, wow, I just don't even know what Teddy said to me over the last 30 minutes, I'm a little overwhelmed. This is a good summary. This is a good summary slide, right? So how did we do in Q1? All right, again, about 100 leads from our larger operators that are seeing generate per location over the quarter. That's down. That's down over the last time we measured it. New lead to tour, that's kind of our marketing metric here, 60%, pretty flat. Look at tour scheduled to completed mid-funnel, pretty flat. Tour completed or registered, big increase, right? Big increase. This is what's kind of holding the data. This is what's kind of keeping our operators growing right now from an enrollment perspective. And then overall, pretty flat, and the average leads up about 1 on years past. So this is where you can kind of see where we're down, where we're up, where we're flat. Again, use this data to benchmark against your own operations and your own centers. Just don't get a global number for your business. If you have multiple, look at it at a center by center basis.
Eddie, really quick on that. I mean, we had talked looking at the data, right? It's like the top of funnel feels down. That's probably demand related. There's just fewer families looking, or spread across more supply in the market. But if you get them in the door, right? If you get them to actually complete a tour, they're maybe higher intent at that stage than they were historically, and they're converting. So the goal is, despite maybe fewer leads to go grab, or fewer families seeking care relative to like a per location basis, if you can get them in the door, that conversion from tour complete to register is like to your point, was what's holding the registration data flat versus down. So got to get them in the door.
Yeah. Yeah, absolutely. That's the takeaway. That's the story.
Awesome. Thank you, Teddy. We do have a question in the chat from Maggie, and
Okay.
she asked any insights on timing and how long it's taking leads to move through the funnel.
That's a great question. It's also, to be totally honest, is now jogging my memory that I think we had somebody at the last webinar ask that, and we didn't get a chance to pull it together for this yet. We should be able to going forward. I don't have a number, so I don't want to give you something that is going to be misleading. We'll work on putting this in the deck. I will tell you that I am anecdotally hearing that it's maybe slower than it's been before in terms of timing. You might have families that are taking their time a little bit more in their decision making, or they might have been a little bit quicker. But again, that's just anecdotal. I don't really have the data for that, so we'll work on looking at timing, maybe trending timing against past periods, and seeing, hey, about how long are you seeing your registered families kind of move through the pipeline? Is that a quicker experience or longer or about the same? All right, so kind of last data heavy slide here. Um, is now at the beginning, I said, hey, we talk a lot about cohort versus non-cohort, and we kind of wait till the end here to show you our non-cohort. This is just saying, hey, we don't care about when the lead was created, just what actually happened over the period. This, of course, is going to be a slightly different data set because you'll have families that come in your system in December and they maybe tour in January and maybe enroll in February. That's totally normal, right? So if somebody's asking the question, like, maybe an executive running the business or an operator, like, I don't care about, marketing, what's going on there, what my conversion is, my cohort analysis, like just how many happened, what's happened, right? You can look at the far right of this chart to see Q1 26. All right, 56 tours, 41 tours completed, and 19 registration per location. That's actually identical on the registrations per location in Q1 25. So if you just said how many kids are actually registering, signing up for an available spot, committing to it in Q1 19, we've seen that number be the same. If you look back at the deck earlier, you're like, hey, Teddy, why'd you just tell me 16? What's the deal with that? Again, remember, 16 is saying of all the leads generated in the quarter, of all the leads generated in the quarter, you're seeing about 16 of them register. But of all leads in your entire system, it's 19. So that's an interesting data point to see, right? What percentage, maybe 20% of your registrations are going to come from outside the period. So kind of interesting to note on that too. 80% you're going to see in period registration. That's actually kind of an answer to the timing question, not so much trended. But again, you'll see about 80% of leads maybe register that come in within that quarter. But it is important to know, right? Because I think customers will always ask us for different data sets, and both of these are available. I think it's very crucial to know both numbers. Again, if I'm looking at operational analysis on my business, I need to know we have 19 register. We should expect about 40 tours from 56 booked, right? That should be what we're actually seeing in the data. I need to look at my cohort data though to spot my marketing effectiveness, my funnel effectiveness. That's going to tell me, hey, are we doing good top, middle, bottom? Where can we double down on? Where can we spend more? That's really where I'm going to be able to actually go act on the data. But if we just need to know what is it, what actually is the truth, the reality, this is it. This is it here, and we're pretty flat. We're seeing again, if you look at the data, same number of registrations, but actually fewer tours, right? That's the same story we've talked about through the last 30 minutes. You're getting fewer in the door. You got to make up for it by winning those opportunities. So just leave you with kind of a finishing slide here, just to think about. We don't necessarily have to talk through all these, but your data does tell a story, right? So most important thing you could possibly do is measure yourself against yourself, right? People always want to go look at what is happening in the benchmark space, and I think it's important. It's health of our industry. It allows us to say what's going on and hold a very kind of insightful and impactful conversation. But ultimately, like make sure you have your Q1 data and you can measure it against Q1 25, right? And then you can start saying, hey, where am I maybe doing across the benchmark for my segment as well. Don't get overwhelmed if you're a single center operator, like looking at what, 100 center operators doing. It's a very different experience, very different team, very different setup, very different funding structure. So we'll try to continue to produce data that helps you see what your peers are doing. But yeah, make sure you have this. Lost opportunity is just a huge one. I will call this out. Number three, right? Let's look at our lost opportunities. This is super indicative to the story. How we craft our eras, how we start understanding what's happening in the macro view is lost opportunities. Are we losing when we talk about kind of entering the maybe an emerging trend of the era of competition? This is the data point that's telling us that, right? When we look at our lost opportunities, we are seeing more reasons like at-home care, public pre-K, right? Those are kind of the things we're watching very closely to see trend up and might be telling us, hey, there is more competition out there than there has been before. So yeah, that's what we have for today. I really appreciate everybody's time. Please tell us what you like, what you agree with, maybe what you're seeing and you maybe disagree with, and what you want to learn more about. Timing, I think that's come up twice now, so we'll definitely work on that one. And just appreciate your time and appreciate all you do for our industry.
Thank you so much, Teddy. We do have one comment and one more question if we have time. Gwendolyn chimed in on the topic of timing and said that it seems to her that the families are starting the journey sooner and therefore it takes longer to move through the funnel. So that's kind of in line with what you were mentioning. And then we do have a question from Nicole. She's asked, when do you count them as registered? Is that by their actual start date or when they put down their deposit? Because some children don't start for months after.
Yeah, that's an interesting question. I do think customers probably differ on this a little bit. I mean, typically for us, a registration means we have confirmed with certainty that they have an expected start date. That could still be in a few months, right? They could be registered, they've secured a spot, they did that, today, but they're actually starting in September. That's not totally uncommon. But when we talk about registrations, we're saying, hey, somebody has secured a spot. They don't have an expected start date. Sorry, I want to be confirmed. That's not expected. They have a true, actual confirmed start date, but it still might not be, for some time.
Another question on tracking lost opportunities and like basically like running back a nurture on lost opportunities and if they enter the funnel again. I don't know if we have data on that. I don't know if we have any perspective if customers do that.
Yeah. Win backs are huge. Is tricky for us to aggregate. So that's not going to be something that's going to be super easy for us to pull at a macro level, but you can pull it at a micro level for your own data. Like lost ops are so critical. They absolutely should be retargeted. Absolutely should be focused on win back campaigns. Like need to be super thorough with lost op reasons too. It's tough. Like you see a lot of these that just get marked as, hey, we don't know, or we couldn't contact them. I know it's super annoying to do things like surveying lost opportunities, but the more data you can get on why somebody chose not to enroll, it's going to inform your strategy, but also informs win back strategy too, to go and retarget.
Nice. I think that's it, Teddy.
Awesome. Well, thank y'all for spending an hour with us, and we'll keep gathering the data we have and be excited to run this back with everybody in about 3 months' time.
Thank you all. Have a great rest of the week and talk to you soon. Reach out if you need any more information or need some help with any of the reporting.